Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. Welcome to Unenjoyment Friday. This is where we're going to talk about the economic data, see how that impacts the overall markets with some market analysis, and maybe sprinkle in some geopolitical fodder, round that all off with some strategies we could implement into a portfolio based on those assumptions. Now, folks, make sure you guys are subscribing with the bell because that'll let you know when I come on unannounced, which is basically the spotting the trade videos. It's going to be when economic data or anything like that happens, pre-market for the most part. All right, so we did get economic data here this morning, just coming out here. We got the unemployment rate coming in at 4.9%, slightly off of, that was in Canada, 4.9%, slightly off of the 5.1% they were expecting. But here in the United States, it is our Unenjoyment Friday where we get probably the most important economic data point of the month here, and that is showing non-farm payrolls. That unemployment change came in at 372,000 hires. That's coming off of the 390. It got revised down to 384, so not much of a revision there. But the thing is, we were expecting only 226,000 hires. I mean, how many times have you folks been hearing about a recession and that we're already in it? Now, you haven't heard me call that because I haven't seen enough negative data right now. As a matter of fact, the PMI numbers are all above 50. That's expansion in the economy. That's not showing a contraction. So we're seeing this even show up again in the non-farm payrolls coming in at 372,000, well over 110,000 extra hires that were expected there. The unemployment rate coming in line with expectations, 3.6%. Labor force participation rate is actually coming off a little bit. That's the ones that are looking for jobs that aren't able to find a job. That number is almost as low as we saw pre-pandemic. So coming out of this, and the last thing is average hourly earnings came in a little bit better than expected there. So we're seeing wage inflation. We're seeing demand coming out of the economic data. We saw crude oil really jack up to 8.2%. That's probably because folks just aren't wanting to spend that money right there on the gas. But we've been seeing the data points that will be drivers of crude oil coming in very good. So crude oil, while yesterday we got that massive build, you would have expected this market to actually sell off, but the build was based on this rally was based on this strong economic data going forward. All right. So they're discounting that inventory number and all the good economic data coming out is driving demand for, or the expectation of demand for crude oil there. Sorry, I just was talking about crude oil and shut it off. There we go. Crude oil yesterday had this big rally, and that was off of that 8 million barrel build there. We were actually, it was closer to probably 10 million barrel build over what was expected there. So we got a big rally off of that, but that was because the economic data were showing that is very strong. Now, bonds coming off finally because this economic data is strong. It looks like we are on path for higher interest rates. The economy is moving along, and not the way that we necessarily want to see it. I think that we could see this market really come to a screeching halt. But at this point, we are still climbing, and the markets are reflective of that. Gold futures here selling off. You know, the only thing we can say there is really that it's strengthened the dollar, and the folks were never allocating monies to something like gold. They were sitting on cash, and we saw that as institutional investors were sitting on record amounts of cash. I think it was well over 80% cash in some of them. So Bitcoin making that rally we talked about the last few days, we were getting that confirmation to the top. Now it's starting to lose a little bit of steam here, folks. So keep your eyes out for this. It is a Friday, and weakness towards the morning is usually reflective of what those institutional guys are going to be doing. And I think that they're going to rush to the Hamptons again, folks. It's summertime markets. Those guys don't stick around past noon Eastern time. So, place your bets accordingly. Usually what we're going to see is this negative pressure here, what we're seeing here in the NASDAQ. Why is the NASDAQ coming off with those good economic data points? Well, it means the Fed is probably going to continue to higher interest rates. If we got a bad economic data point here, we might have actually gotten a rally. Institutional investors are selling off here in the morning, but when they start slowing down on their volume, we could see some bottom picking going on here again, as the retail investor looks at these economic data points and says, you know what, it is a buy. And fact of the matter is, folks, I'm kind of leaning towards that camp, at least at this point. Selling those puts in this high implied volatility market is definitely a recipe for success here. I would not go full Monty or go full boat and allocate all your money like today, but I would be looking for opportunities to sell puts. It may not be right now today, but you could be looking at a rollover here in a name that you like. When it starts selling off, we're going to be looking for opportunities as a bottoming to sell those puts again. All right. Dow Jones Industrial Average, again, same situation here. Should be rallying possibly off of the good economic data we've been getting, but we're getting a bit of inverse moves here based on the market trying to signal to the Fed that they don't want higher interest rates. And E-mini S&Ps, again, near the lows of the session here. And that, again, is just what we're going to be seeing here from institutional selling going on in the morning, but late in the afternoon, be wary of a bit of a low volume rally. So you can see heavy selling here happening right here off of that non-farm payroll numbers just ahead of the open there at the E-mini S&Ps. That's about it. Last one is you get a shot of the old floor when we opened up there. All right, so that's all I got for you guys. Hey, bonus points if anybody can find me on here. I'll tell you what, I'm using a piece of technology that nobody did before that. So you find two guys, basically. It was me and my clerk. So look for new technology. That's the way we change the paradigm on the floor. Think outside the box, folks. All right, that's all I got for you. Have a great weekend. And if you can't take that, take it easy. I'll give you a hint. I'm on this half. Bye now.